Hello everyone, welcome back to Acme Education, a platform where every question on commerce gets solved. I am Ritu Gaur, and till now we have checked out our national income part A, B, C and D. So today is going to be part E of national income, and that is going to be expenditure method. If you like this video, please subscribe to our channel and also like, share and subscribe to our channel. So let's start with the expenditure method. The first in the expenditure method, the first thing that you have to know is the components of expenditure method. So the components in the expenditure method are divided into four. As you see on the screen, there is private final consumption expenditure, which is called as PFCE. Then there is government final consumption expenditure, which is termed as GFCE. Then there is gross domestic capital formation, that is CDCF. And lastly, there is net export, which is X minus M, that is exports minus imports. What exactly do you mean by private final consumption expenditure? So the private final consumption expenditure also has certain components like household final consumption expenditure plus the private non-profit institutions which are serving the household's final consumption expenditure. So if the private final consumption expenditure is not given in the exam directly, you just have to find out the private final consumption expenditure, and to find out the private final consumption expenditure, you need to add these two components, that is household final consumption expenditure and the private non-profit institute which are serving households final consumption expenditure. Any expenditure by a non-resident and a foreign visitor in the domestic market will be deducted from the private final consumption expenditure. So let's say if there is a foreigner who's visiting our country and doing any kind of expenditure, that will not be counted in the private final consumption expenditure. Similarly, if there is any non-resident who is not a part of our country and doing any kind of expenditure, that will also be deducted from the private final consumption expenditure. Moving to the second component, and that is a gross fixed capital formation. So if it is not given directly in the question, you will have to find it, and to find the formula is intermediate consumption of the government plus the compensation of the employees which is paid by the government plus direct purchases from abroad from the embassies and the consulates located abroad minus the sale of goods and services which are produced by the general government. By applying this formula, you can find out your GFCE if it is not given directly in the question. Your gross domestic capital formation, or which is also called as your gross investment, is calculated by gross fixed capital formation plus the inventory investment. If your gross fixed capital formation is also not given directly in the question, then you can find out by gross business fixed capital investment plus gross residential construction investment plus gross public investment. Lastly, if the inventory investment is also not given directly, then you can find out by doing closing stock minus opening stock. Moving to the steps in calculating national income with the help of expenditure method. So now, step number 1 says, identify the economic units into 4 different groups, and this time the groups are household, government, producing sectors, and the rest of the world. This step is again just a theoretical step. In practical practice, while you are solving a sum, you don't need to do this step. Step number 2 is calculate your gross domestic product at market price. To find out your GDP market price, you need to add the 4 components, which are private final consumption expenditure, government final consumption expenditure, gross domestic capital formation, and the net export, which is export minus import. Once you get your GDP at market price, Now you need to find your NDP at factor cost. Well, your NDP at factor cost is also known as domestic income, and to calculate the domestic income from your GDP at market price, you need to go to just the elements. That is, first you need to check that we need to go from the gross to the net. We already have our gross domestic product and we need to go to the net domestic product. So to go from gross to the net, we need to deduct depreciation. Next element that we see over here, which is different in this two, are market price and factor cost. Market price, we already found out in step number 2, and this time we need to find the factor cost. So to go from market price to factor cost, we need to deduct the net indirect taxes. And the net indirect taxes are nothing but indirect taxes minus subsidies. Finally comes your step number 4, which is NNPFC, also called as national income. So national income is also called as net national product at factor cost. To calculate that, we have already found out in step number 3 our NDP at factor cost. So basically, we need to go from NDP to NNP. Again, if you see, domestic to national, you're supposed to go. And when you're supposed to go from domestic to national, you need to add your NFIA. The rest of the elements, that is factor cost is same. So that's it. All the 4 steps: identify the 4 units, calculate GDP at market price, calculate NDP at factor cost from your GDP at market price, and finally calculate NNP at factor cost from your step number 3, that was NDP at factor cost. Now we move to certain precautions that we need to take while we are calculating national income with the help of expenditure method. There are certain items which will be included and there are certain items which will not be included in the expenditure method. So seeing the first item, which is included in the national income. Any kind of expenditure which is on own account production will be a part of national income. Moving to the items that are not a part of national income, any kind of an expenditure on the intermediate goods will not be a part of national income. Again, the same reason that we did in our value added method, that because intermediate goods are going to add double counting, we don't include the value of expenditure, we don't include the value of the expenditure on intermediate goods. Intermediate goods are still further to be processed, and in national income, we take directly the final price of the product. The second item that we don't include in our national income is basically the transfer payment. Well, what are transfer payment? Transfer payments are like any kind of a charity, grant, subsidy, which is basically single-sided from one person to another. There is no transaction taking place between two. That will not be a part in the national income. The third element that you are not supposed to include in the national income by the expenditure method is purchase of a second-hand good. Again, a second-hand good has already been sold and it has already been included in the national income of that year in which it was first time sold. So we will not take the value again because it will be double counting. And finally, the purchase of any kind of a financial asset like shares or bond will also not be a part of the national income in the expenditure method. So this way we complete the entire expenditure method, and please do like, share and subscribe to our channel, and thank you so much.